Hello everyone, hope you're doing all right. Thursday today is the 27th of April right now, and we are going to dive into another higher time frame market review. All right, some things I want to touch on, some things like picking the best pair to trade, focusing on that low resistance liquidity run that we can trade for the week, etc. And that's a huge skill because if we can find that pair that has the best low resistance liquidity run basically meaning it's the cleanest and it delivers the fastest to the draw on liquidity. So if we can find that pair, then we are set. Then we only have to execute on it. And of course, finding that pair is one thing, then that pair actually playing out according to our plan. It might not always happen, but we can anticipate, we can react accordingly. Now, there's a few things I want to talk about. Obviously, I'm not going to keep repeating myself here. We've talked about order flow yesterday in the Zoom, and you can now potentially see why I'm not trading the dollar and why I'm not trading the majors currently. Why is this? Order flow is not following through. There is no order flow on dollar. It can go higher, it can go lower. There's a 50-50 bias, no order flow established. So I'm not trading it. As simple as that. All right, so let's not keep our repeating ourselves and let's just move on. If we go to the crosses right here, this is where it gets interesting. Now, I've seen today, I just took a quick look at Australian dollar right here. Australian dollar is weak. Just only thing you need to know. When dollar is consolidating, you move on to the crosses. If you are ready for this step, because it takes some experience and some emotional control to not look at every pair and start forcing trades. Now, you take a look at the crosses. These are the crosses like we talked about yesterday. The futures contracts are right here. So this is every single individual currency. Then we take a look at Australian dollar first. Australian dollar, bearish. Only thing you need to know right now, bearish, and it has a fair value gap, has displacement right here. This is looking bearish. British pound, still, if you look at the long term, still bullish. Can't call it top right now, still bullish. Then if we look at Canadian dollar, bearish right now. Coming into this daily fair value gap, could potentially drop off again right here. Euro, bullish. Just bullish for now. It can drop right here off the monthly CB, but again, still bullish right here. The yen is a bit in the middle. It's a bit of consolidating, but the reason why I'm a little bit bullish is because we are not displacing away currently off of this breaker. And we've already came into the breaker right here, came into the volume imbalance with the overlapping fair value gap right here. Didn't displace lower. So I'm a bit in the middle, consolidating. New Zealand dollar, bearish, but no displacement lower. So it is bearish, but no displacement lower. Swiss franc, going higher, bullish for now. Just very basic looking at the trend right here. Just very basic. Just has it been going higher? Has it been going lower? Is there a reason for us to go higher? Yes, there currently is. We could still come into order block. We could still sweep this low and then continue higher. All right, perfect. So then I went on to the pairs. Australian, Canadian dollar. Australian dollar, Canadian dollar. And let me find, yeah, this is the pairs. First, 3 is the first filter, sort of. Then the second is the next filter. Then the first, the red one, is the actual low resistance liquidity run that I came to, that I determined. So this is your filter processing. So at 3, we have GBP, British pound, Australian dollar. We have GBP CAD, we have New Zealand dollar, and Swiss franc. Now these are all either very low in a leg or not currently in any sort of fair value gap, etc. So let me first take a look at New Zealand dollar, Swiss franc. You can see this is overlapping, this fair value gap is overlapping with a mitigation block. Now, as I've talked about many times in the Zooms right now, if it does want to continue lower, I like to see a fair value gap that's overlapping with something. So this is overlapping with the low, with an all low, with a mitigation block. So if it does want to continue lower, I would like to see lower prices here. But it wasn't near the fair value gap right now, so I wasn't that interested in this pair. Next week might be a different story. Again, why not this fair value gap? It's not overlapping with anything. And this high, this swing high, already came into this fair value gap. So I have a rule, price can come into a fair value gap twice, but after that first time, I do like it less, especially when it's not overlapping with something. This is overlapping with another premium rate. So I like this fair value gap more. So that's why it's green as well. Nothing clear yet, but it can still come. Then GBP Australian dollar. Again, it's very high right now. It's almost in a premium, etc. I don't like to buy a premium. It's currently sitting right here, so there's nothing yet, but can still come. Could come into this order block and then see a push higher into this fair value gap, order block, push higher. That would be perfect. GBP cut, again, same story. We've talked about this pair a lot currently, a lot in the past few days. Still waiting on some sort of retracement. If we do get a retracement, not trying to short it, we are waiting for the high probability longs. Sorry. All right, then the second one is the blue one. And you'll see there's a few more pairs. So the blue ones did come, they passed this test. So you can see it as a first test. They passed this test, but they didn't get past the blue test into the red one. So if we take a look at the blue one, first, Australian dollar, Canadian dollar, daily, you can already see daily is kind of looking a bit bullish here. But on the 4 hour, it's dropping lower here. This is what I have marked up in this morning. So this was a bit 50-50 for me. Now, if this is 50-50 for me, I'm not going to try to force a trade right here. There might have been a trade here, perfectly fine. And you could have caught a little move, a little scalp, perfectly fine. But I wanted a very obvious low resistance liquidity run. This gave me some doubts. This pair gave me some doubts. And that's not what I want. Australian dollar, Swiss franc. This pair, it is looking pretty clean right here. This fair value gap, potentially this order block right here into this fair value gap, then continuation lower. But same thing, it's basically in the middle of nowhere. Yes, there is a low right here, but this is COVID lows. I don't really take them into account. I just look at this, and this is nearby price. You could say this is your IPTA data ranges here, these lows. So there's no float to the downside, aka there's no liquidity to the downside. If there's no liquidity to the downside, what will price seek? Liquidity to the upside. So that's something I do take into account, and that's also why the other pairs were in green. All right. AU. This is also looking pretty clean right now. We came off this weekly something, weekly fair value gap, daily fair value gap right here, overlapping with a breaker. This is looking pretty clean. But the reason why it's in blue, and if you, please, if you do, if you do think about it, if you go through the pairs right now on your own, and maybe try to guess my thought process, or try to predict my thought process. What am I thinking, etc. So that's a little bit of a homework you can do in between. Sorry, let me grab some water. All right. Sorry. All right. AU. So AU is actually looking pretty good. But the thing is, dollar isn't agreeing with anything right now. So because the dollar isn't agreeing with anything right now, every USD pair, so if it has USD in the name, then it's low probability. It's, of course, it can still work out, it can still do its thing, but it is lower probability. And I thought about this today, actually. Because essentially, what I always say, the higher time frame, that's where our hard work is done. Essentially, that's where all our patience is, etc., etc. All our hard work is done on the higher time frame. Our higher time frame agrees. Making money is so easy. And that's why higher time frame is going to be the most important thing. Of course, psychology, etc. They all have to work in sync. But for actual technical wise, higher time frame is so good. It's if that agrees, if your higher time frame agrees, then everything will work out. Now, and that's why it's so crucial to wait and to study the higher time frame. And that's why I always say on the lower time frame, it's very easy to justify a trade ID. But if we first can get through the customs, remember that saying that I said earlier, if we can get through the customs of the higher time frame, then the lower time frame, we have a free pass. We can do whatever we want on the lower time frame and we can still make money. If the higher time frame agrees, we can do whatever we want on the lower time frame and we can still make money. Lower time frame, there will always be a trade that's justifiable. There will always be something that can be justified to take a trade. Higher time frame is the strongest thing you can do in your technical skills. All right, so again, dollar is not agreeing. Again, if it does want to continue lower, I'm expecting some kind of sweep right here and then a continuation lower. Now on the 4 hour, we did have this order block, which could prevent it from going higher into the daily fair value gap. But remember, daily is stronger than the 4 hour. So the daily fair value gap will have a stronger magnitude. The daily is like a very strong magnet. And the 4 hour is a little bit weak. A little bit weak. So here, do we have the magnet thing right here? All right, either way, it doesn't matter. Just imagine a magnet right here in this fair value gap. And here is also a magnet, but a little bit a weaker magnet. Like these magnets. You have one strong magnet and a weak magnet. Now, again, and that's why the daily, if you do want to get involved on the 4 hour, and that's a great move. That's absolutely not a bad thing. I wouldn't advise to wait for the daily because it might go lower off of here. But your risk management, when we do get to execution, your risk management should take into account that it can get to the daily and sting into the daily. So that means going break even earlier, etc. Anticipating that we are trading into this 4 hour fair value gap, going break even earlier, having a professional risk management approach. And if we're in the daily and seeing some kind of rejection, we can be a little bit more loose. We can let the trade breathe a little bit more. All right, Canadian dollar, yen. Yeah, this daily fair value gap right now. Again, I would want to see this go lower. And the reason I didn't look at this specifically because the 4 hour wasn't clean and was kind of rejecting here and nothing clean on the 4 hour. So I was like, I just wasn't really that sure on it. And it also gave me those 50-50 feelings that I didn't like. So I just left it alone. EU, again, same story. We're coming off of this monthly SIBI. This could be very clean in the upcoming days. Now, in the Discord, I said as well, I called out a few pairs. And I said I was looking to short EU potentially. But in order to short EU, we need an order flow shift. This is a perfect example right now. These days that we are coming into a higher time frame PD array, depending on a monthly, weekly, daily. If we are coming into a monthly SIBI, a monthly premium array, we are going to have reversal days. They are called reversal days. This price action is where a lot of people get chopped up on the lower time frame. And this is exactly why we look for a reason to trade on the higher time frame. Lower time frame is there's always something on the lower time frame. Lower time frame traders, not taking a shot at anyone, it's nothing personal, but having a reason to trade on a lower time frame, there will always be a reason. I hope that makes sense. There will always be something to justify a trade ID on the lower time frame. That's my point. That's the point I'm trying to get across. If the higher time frame, if you pass that first, then again, I think you get it. But again, like we said yesterday, I wanted to see an order flow shift. And what I said in Discord as well today, I wanted to see an order flow shift on EU. Now, an order flow shift, displacement from a premium ray, displacement, aka your fair value gap. This needs to get respected with this overlapping order block for us to get and respect. What is respect? Definition of respect. Another displacement lower, another fair value gap lower. Boom. This right here is where we would want to get involved. So again, I called out this. I said, take a look at EU, and if there is a fair value gap forming that we do currently have, take a look if it wants to trade back into it. This could be an aggressive entry because, of course, the way I enter my trades is not necessarily how you have to enter your trades. So if I'm waiting for this right here, then you could very well trade this aggressive entry. This is an aggressive entry. This is already your ST entry. This is your premature entry. And it might fail sometimes, but your reward will be bigger because you have more room to play with. So I would be looking currently at EU on this. And this is actually, if we just take a look at EU, this is very clean. But again, why is it in blue then? Dollar doesn't agree. And that's what makes it a bit low probability. But again, this is looking pretty clean. So in the next few hours in London session, whatever it is, I would want to see something like this and aiming for these lows, for this low. So I called out a few pairs as well today that I wanted to short, that I wanted to long, which we'll get into as well. Okay, right, New Zealand dollar yen. There was no real displacement lower on the daily, which I didn't really like. We did come into this order flow, this ST order flow got respected right here, but no new displacement, which I didn't really like. We're coming into this daily order block. If we do want to continue lower, we'll continue lower off of here. But we did come into this breaker as well. No displacement lower. It just, you can already tell, it just gave me those 50-50 feelings again. And then we had a 4-hour fair value gap right here. A bit 50-50 feelings. I'm just not really sure, etc. You can obviously be my guest to take a short here. But again, keep in mind that it is low probability and your risk management should be on point. Dollar, Canadian dollar, US dollar, Canadian dollar. I marked out this fair value gap. And I wanted to see a previous day low sweep and then a continuation higher. But the reason is low probability and it's not in blue and not in red. We're coming into this weekly order block. Weekly is stronger than a daily fair value gap. So monthly is stronger than a weekly. Weekly is stronger than the daily. Daily is stronger than a 4-hour. Every 4-hour should be in context with daily. Every daily should be in context with the weekly. Weekly should be in context with the monthly. So if we know that, the order block, can we expect this fair value gap to hold? It could very well hold, but it is a little bit low probability, right? We would want to get involved somewhere here in this leg until we reach the target of the weekly order block, not when we are in the weekly order block, because then it's low probability. So again, I marked this out, and again, it's a USD pair, so automatically low probability right now. And you can see how we are not displacing higher currently. We could still displace higher, don't get me wrong. It is just a little bit low probability. We are essentially buying in premium right now, and that's not what we want to do. Let me get a breath. All right, this pair is something we caught yesterday. This was pretty clean as well. This ST is what we had, a very clean ST. Then in London, this got respected. It gave a beautiful entry as well. This would be your aggressive entry. Then if it now comes back right here, maybe into something along the lines of this, overlapping with this fair value gap potentially, or just right here, it continues higher in the morning in London or something, that would be an entry possibility of mine. Now this is also a beautiful entry possibility. So don't get me wrong. You don't on the 4 hour. Let me put it this way. On the higher time frame, it is less essential in a situation like this to get order flow aligned. So the aggressive entry is more justified on the higher time frame. But if the exact same thing right here happened on the lower time frame, then it is less justified. If that makes sense. Why is this? A higher time frame, you're coming off of something on a monthly, on the weekly right here. You already have the weekly, monthly possibly supporting you. Then you already get a 4 hour ST right here. After sweeping this low, then, and this is already more justified because there's more power behind it. And on the lower time frame, if this something like this happened on the lower time frame, I would 100% wait for this right here, for it to come here and then enter. So again, a higher time frame, it might be more justified to take the first potential order flow shift, and lower time frame, for me, it's essential that the order flow first switches and then I enter. All right, and USD CHF is also something called in the Discord that I wanted to see go higher. We reached something here, which I believe was a daily fair value gap or something. Yeah, daily fair value gap. It could reach into the highs. That wouldn't surprise me because we don't really have a displacement lower, not closing below the low. So it could reach for this high right here. Again, if it does want to continue higher, I would want to see continue higher off of somewhere in here. And that's dependent on where do we end up in London. So we take another look in London. And in London, I would take a look right here. All right, where are we currently? Can we sweep something? Can we sweep something into a higher time frame PD array right here? Something like this during London. So you might see, do this, then London opens. All right, perfect, nice. But if everything is disrespected already in London, then there's no trade. So this is also USD pair, so that's why it's not in the red thing. And this is the red one. JPY. This is, as you might have saw, the yen is not fully rallying higher currently, but it is in a consolidation. And as you saw, Australian dollar, let me show you. Australian dollar is displacing lower. We also have this fair value gap on the Australian dollar. This is pretty clean. This is a clear drawn liquidity in my eyes. So if the yen is only consolidating a little bit, failing to displace, Australian dollar is still a lot weaker than the yen currently. So with that logic, if we go into Australian dollar, yen, and using that logic as well, if you go through these pairs and note the weaker pairs and note the strong pairs, and then when you have your weaker, sorry, not the pair, note the stronger currency and the weaker currency. When you have one currency, a weak currency, as Australian dollar, pair it with a relatively strong currency. And then, ta-da, you get your pair. And then we obviously need the pair to agree. This is not a full set in stone where it always works, etc. Of course, it's trading. We are trading probabilities, is not 100%, but we can get the best low resistant liquidity run. Now, if we take a look right here on Australian dollar yen, the only thing worrying me was we are coming into this monthly thing, but we didn't fully reach it. So I was like, all right, nice. I like it. I like it. We do have this monthly order block to support it. We are having this weekly fair value gap to support it. We're rejecting off it. Perfect. On the daily, should be in context of the weekly. If the daily wants to continue lower, boom, daily fair value gap. Potentially, we could even reach into the daily order block right here, but we should not come above this high. We should not close above that high. Never should we close above that high. So this is something I loved. I saw it and it was so clear. As you saw how easy the story was for me to tell you? See how easy it was for me to tell you on how to get to a drawn liquidity, and on this pair, it was so easy, and that's the pair you want to trade. You can do this for yourself. You can apply your routine, and that's the pair you want to trade. Now, again, all these short-term premium arrays, these are the things we want to see holding until we reach this draw on liquidity. This one right here. So we can make a new short-term high right here, but we want to see it hold until we reach draw on liquidity. It can get swept. Holding doesn't mean it can't get swept. It can get swept, and a short-term high can get swept, but it shouldn't be close. It shouldn't close below. And that short-term high, like we talked about, should have or create a fair value gap. So right here, we should create a fair value gap in this leg lower if we do want to continue lower. So I absolutely love this. Currently, we have the 4 hour, as you might have saw. I talked about this in the Discord as well. And there was a question, can we take this 4 hour and this daily? Yes, we can take both. But like I said, daily daily is a stronger magnet. It's on its higher time frame. The higher the time frame, the stronger the magnet. So if this is a stronger magnet, keep in mind that we have this daily fair value gap. If you want to trade off of this order block, which is clean, for sure, it's a clean order block, but your risk management should be in place and on point. This leg lower was enough for you to go break even. If price wanted to go higher, where will it go higher from? This 4 hour fair value gap. And that's exactly what we talked about. And I said, it depends on what we do at this 4 hour fair value gap. If we close above, like we did here, it will likely respect it. So right here, you should be break even right here. But that's execution. That's something we'll touch on later. Don't worry. So again, I really like this. I do expect lower prices. If I was to trade a pair this week or upcoming weeks and nothing changes, so dollar stays the same in the same conditions, etc., then I will be trading Australian dollar yen more than likely. So yeah, this would be my low resistance liquidity run. And this is how you apply the filtering process, etc. And now we've gone over structure, candle science, order flow, filtering process, what to do when dollar is in a consolidation, what to do when you don't see something you like, etc. There's a lot of concepts thrown at you this week. And that is because higher time frame is where our hard work is done, essentially. Now, please, if you don't understand everything, don't worry. It's only 1 week. The years, the 2 years of knowledge that I'm throwing at you right now and try to simplify as much as I can, you're not going to grasp it in the first week. You're not going to see everything in the first week. It's totally fine. It's you can't fully understand my brain within 1 week. That's perfectly fine. Don't worry. So take your time, etc. It's absolutely fine. All you need to do is stay consistent and keep your psychology in check, because if you do encounter low probability conditions, then no, this is normal. Don't blame the market. Of course, PA price action might be a little bit shitty, but if you're constantly indulging in that behavior and saying to yourself, price action is shitty, price action is shitty, price action is shitty, take some responsibility and think, all right, how can I maybe perform better? All right, if it's a matter of just waiting, all right, price action is shitty, but it's normal. It's normal price action still. So I'm just waiting right now. So that's something to think about. And again, it's not, don't worry if you grasp this concept within 1 week. It's the same for execution, same for MMP, same for psychology. You'll probably not understand it completely within 1 week, not even within 1 month, maybe. And that's perfect, because that's where the consistency comes in. And then the only thing holding you back is time. Now, again, what I wanted to show you, I told you weekly has more magnitude, right? Weekly has more magnitude than daily. Daily has more magnitude, is a stronger magnet than the 4 hour. See this right here. Weekly fair value gap. Daily fair value gap. Why didn't it come into the daily? The weekly. everything on the daily should be in context of the weekly. And this is where a lot of people go wrong, and they start trading the 5-minute right here and start seeing this. Yep, shoot long here. All right, perfect. There's always a reason to justify a trade on D on the lower time frame. Always. Saw these equal highs swept? See this ST? Entry. Easy. Oh, I forgot to break even. Oh, took an L. Oh, why did I take an L? Well, maybe, my friend, you're shorting just below a daily fair value gap. Ha. And it's not to take a shot at anyone or anything, but it's just what I've also been through, and I've also traded like this, etc. And that's just something to take a look at it. There's always a reason to justify a trade on the lower time frame. Always. But that doesn't mean that the lower time frame is, or that doesn't mean that the conditions are good enough. Let's say that way, because we need to first get through the customs, which are the higher time frame. Same goes for this, right? Oh, this is pretty clean. And of course, I'm cherry picking now the losses, but again, you will take wins, obviously, but your win rate will be lower, your return will be lower, your psychology will be absolutely messed up, because if you're constantly taking losses like this, you will just get thrown around, you will absolutely get angry, etc. And it's not something you want to do. All right. So this daily fair value gap, actually, if we can get some sort of rejection, execution, 15-minute, I like to see a 15-minute ST right here, sharp turn. If we could get something like this, a little sneak peek to execution. Come on, we're almost at execution. But again, a close below this fair value gap would indicate a lot, but that wouldn't mean if we do close in the fair value gap, the idea is not invalidated completely. If we still reject somewhere in here, then I would still play it. All right. So thank you all, and I'll see you tomorrow at the next Zoom. All right. Thank you.